It's Friday. Happy Friday, everyone. I hope you've had a fantastic week. It's Friday. It's yeah, it's been a great week. I actually, in general, the weather has been fantastic for fall, bright and sunny, beautiful leaves, maybe a little bit overcast today, but I hope everyone's had a great week. My goal today is to bring to you some updates on the mortgage rates as well as real estate updates for Toronto, especially if you live in the Greater Toronto area like I do. I know that everywhere is experiencing probably similar issues and similar economic times with respect to the market, but you are going to hear about Canada and so, or Toronto, Canada area. Thank you always for joining and plugging in. For any of you that have questions that don't get answers, please, do reach out, DM, message, and I'm happy to try and answer them. If I can't answer it on the call, I can absolutely, send you a message or answer it on our next call. So remember, I'm here on YouTube and Instagram on Friday at 11:30, and Mondays you can find us as well on Facebook. Now you have to join our Facebook group because it's a private group, and it's an excellent place to get knowledge, to continue staying abreast of what's going on in real estate, find out, we share opportunities available, experts available, so that you can always have access to the knowledge that you need and the resources and experts that can help you attain your goals. So don't forget to join our Facebook group or to subscribe to my YouTube channel. So on Mondays, we are there, Facebook, 6 p.m., Instagram as well, so that we can help you with whatever it is that you're, finding is challenging for you in real estate. Like me, I mean, I must say that the last year definitely, since late 2022, it's been challenging. Still got projects and things on the go, but some of them have had challenges, slow with respect to city approvals and permits, delays due to developers or invest capital, accessing investment capital, and all of those challenges. But don't forget, in our bio, you can click on the link to go and get registered for our free virtual event happening next Thursday, November the 14th at 7 p.m., where we're going to have three, not one, but three guest experts who are going to share with you their opportunities, their product that can help you get going in real estate. So you don't have to buy a property to start real estate investing. You can actually just decide to invest passively and have your money work for you, which is an excellent way to get started in real estate. And it's one of the ways that I've helped supplement my real estate income, being a real estate investor, consultant, owner. It's not consistent, especially when you're relying on tenants sometimes to pay. I live in Ontario. Most of my income comes in through the province of Ontario. And so it's not easy to, to get consistently have that income come on. Christy, I asked you to join because I was saying, do you want to come on? But you didn't really reach out. But thank you for joining. Next week, you can join and be a part of the live so that we can share with people the new things that are going on in your, in what you're doing with respect to your license. You're really newly licensed. I just see my daughter Christiane, and we're gonna, we'll invite you the next time. Oh, thank you. Arnold's also joined. Yay! It's Friday, people. But let's get started. So I've been doing a lot of the reasons why my income has, been down is because the mortgage, a lot of my mortgage renewals were happening just around the time that the rates all started going up. So late 2022, when the rates started going like this, and of course 2023, when they didn't come down and they still stayed high, that all encroached on my ability to generate cash flowing properties like I formerly did, because my mortgages went from, maybe 1,000 or two to $3,000, $4,000, $5,000, $6,000, $7,000 And even when I was stubborn and refused to renew at their horrible rates, and I stayed in an open product, then they would even increase it further. So lenders, banks, they don't do things that are favorable to you and I as investors and owners. So I've since, been able to get them a little bit under control, so that I've got a couple cash flowing of those ones that renewed. I've got a couple of them now cash flowing. By next year, if they're not all cash flowing, guess what's going to happen, people? Just like some of you are probably already dumping those properties and selling them off, it's likely in the next year to 2 years, if they're not cash flowing, they're gone out of my portfolio, and I'm moving on to bigger and better things that can generate income for me and help me do what I was doing well before, which is generating a fantastic income that allowed, a lifestyle for myself and my family. So mortgage rates. I love Ayanna. She was on here a couple of weeks ago with me. She's one of our mortgage agents. She updates us weekly, telling us what's going on. And so the rates have been coming down. They're looking way better. They're probably never going to be back at the ones and twosies that we saw before, but they're absolutely going to come back down even further than we see them right now. Currently, the mortgage rates have been right now, 5-year fixed is showing at 4.29%. And these are insured mortgage rates. So obviously, if you want the best rates, you're going to have go to lenders that can offer insured rates as well as the discounted rates. And this is 5-year variable, which I've often stayed in, and I've still been in mostly variables where possible. I've stayed variable so that I can exercise my option to take advantage of the decreases in interest rates that we're seeing now and that we will continue to see in the next probably 6 months to a year. You can't exercise that option to get that decrease if you're in a fixed rate, because if you're in a fixed product, you're usually locked in for possibly a year, 3 years, 5 years, and whatever else other terms. There are up to 10 years that you can choose. I typically don't go 10-year term on anything, but for some of my multi-units that I'm closing in the upcoming months, I've taken the 5-year fixed because it just makes sense. The rates are down in the threes. I'm not getting standard typical rates that you're seeing at the bank. I'm getting the bond discounted rates that are offered to multi family type commercial type style properties. That was a mouthful. Anyhow, so for conventional uninsured rates, the rates are still not too bad, 4.59 on a 5-year fixed. So, if you can get slightly better, I would shop around because these rates are not always the same that you will see everywhere. Yeah, thank you, caller, for calling in the middle of my life. I can't take your call. So you can always shop around. And of course, if you've got great credentials like credit, income, you've been operating and or working for the same company for 2+ years, the longer the better. That just shows stability. And banks and lenders in general, they are risk averse. And so they like stability. And if they take on risk, then they're going to charge you for that risk, meaning that they're going to increase the rate that they charge on your loan or your debt. So 5-year fixed at 4.59 is not too bad. Some special promo rates that she disclosed is if you can do insured purchase on a 3-year fixed, you're getting 419. I mean, the points, each point difference it's not bad. I wouldn't, jump ship from a lender that's giving me, 429 to go to someone for 419. It's not worth it. You stay the duration in the course. But if you can get a 0.25 or a 0.5, those are huge, differences that you can utilize to, really save substantially and get yourself doing a really uh, good job getting slightly more income. So the less you pay monthly, the more income that you can retain when you are collecting, your rents, or if you are, your own property. If you can save yourself $100, $200, why not, right? So those are the rates. They're still, I think, way better than they were probably 6 months ago and a year ago. But for you, I would suggest that you continue to try and stay in something either just 1 year fixed or at least variable if you can, because you will be able to exercise the option to get that discount in the upcoming months to maybe, the upcoming year. In terms of the Toronto real yeah, first of all, for any of you that are getting rates like this or better, if you're getting better, share with us where are you getting better rates? Or if you have any comments about, your own mortgage coming up, either you're having a new mortgage that you're starting or you have a renewal coming up, let us know what's going on for you and what we can do to help you. Because if you have a mortgage renewing now, you definitely want to shop around. You don't want to necessarily stay with the same lender. You want to give yourself the option to potentially get better rates and better the opportunity to even stay maybe slightly open for the next year so that you can have a chance to get significantly discount rates as they come down, because I think there's still more room to come down. So the market in Toronto, I feel, just going on Reddit this week and taking a look at what's going on, and even just in the Toronto area. I can attest to these numbers. We're seeing that the prices that we're currently seeing for homes that are listing and selling, they are, thank you, thank you, thank you. Oh, and I see another person there that I know, Corinne. Thank you for joining. We're seeing that the rates, the prices are still low. In fact, they are resembling the prices that we saw back in 2021, which is now what, 3+ years ago. So typically in real estate, we find that we see the price of homes going up, not staying the same, or the worst case scenario, going backwards, right? You're now, where you like, I have that. I've seen my appraisals back in 2022. I've seen them go from, a 1.1 appraisal to now maybe a very soft about 1 mil or slightly under, depending on market, right? Because it's what people are willing to pay. I mean, obviously, I can still list at the 1.1 and hope to get that price. But in general, what we are seeing is that the prices are not improving. They're holding the same as we saw them 3 years back, and or they are actually, dropping. So Stacy asked, what is the topic today? We were discussing, Stacy, who's also a mortgage broker. We were talking about the rates. So the mortgage rates have been coming down. The fixed and variable rates are slightly better, right now. And I think that's a good thing, because that's helped me bring some of when my renewals occurred from August right through till October, I was able to get slightly better rates, which meant that my mortgage payments were lower. Lower is good. It's better for me because now it meant my income was higher. Yeah, I was getting more. So I'm now cash flowing on some of those properties that in 2022, when the mortgage rates were up, I was struggling to cash flow. And plus, struggling to cash flow is like really not the only reason I was not cash flowing. It was also tenants weren't paying. And thank you to the landlord and tenant board here in Ontario. It is sometimes very hard to cash flow when tenants don't pay your rent, or it takes months to work on, getting the clients out, right? Because that's what I want. I want them out when they're not paying, because when they're there and they're paying, I'm happy. And, when they're there not paying, they're happy, but not I. So definitely the rates have been a huge savings in the last little while. And yes, Stacey, it is going in the right direction. I feel much happier to see the rates going down and coming down. And I pray for all of us, especially people that are trying to enter the market. I pray that it will continue to come down. I mean, I'm already an owner, so it's probably not as hard for myself as it is for someone who's just getting started. These rates for someone who's just getting started makes it so much harder to get approved. And now, the one thing that's working for someone who's just getting started is, remember, the prices of homes are still down in Toronto and they're still down in the GTA. So if you can get in now, secure a mortgage now, you can absolutely get it at a slightly, like you're buying slightly lower. So it's like, it's kind of on sale, right? If it's still at the 2021 prices, we're seeing that the losses for owners who still have and have had properties during the entire time, we're seeing that we're seeing losses of like 243,000, 253,000. So it's still pretty substantial. In some cases, it's, as I said, depending on the location, we're talking Toronto. Toronto prices are much higher in general. So depending on the location, you can see 100 to 300,000 down, right? Which means that, as I said, we're still seeing prices staying uh, where we saw them maybe 3+ years ago. But I don't know if this is going to be the trend. And the reason I thought to bring this topic to light today, thank you for joining, Tiffany, is because I wanted to list a property. Okay. It was Thanksgiving. Before Thanksgiving, we agreed that it was, not a bad time to list. And so I got it prepped. It was empty, which I love because it's so much easier to list and sell a property when it's empty, no tenants, no owners, nobody's living in it. It's so much easier for people to go and see it. And my daughter being a fairly new agent, I thought, yeah, this would be the perfect way to sort of get her going, along with my existing realtor who, they were going to partner up and double up on this. But prior to Thanksgiving, the market was looking pretty good, and we'd seen some really strong sales in September. So we were preparing it, and then we were getting it to list. And guess what happened? Within a month's time, the prices dropped substantially. Now we saw, and the reason I say drop substantially is because we now saw, this is a semi-detached home. We saw a detached home selling for 100,000 less than the semi-detached home that I wanted to list. So guess what we had to do? Andrew had to decide, because I think it's very hard to earn 100,000. It's not an easy feat to get 100,000 in. I've got a lot of calls coming in. In a year or even in a month or any time, really. Especially when your business is, under attack with the market, the client's not paying, so on, so on, so on. So I decided to pull it and not continue to have that property listed. And I thought, okay, what about if we do it in the spring? And so my agent says, well, I don't know, Andrea. It's the market likely in the spring is going to be more competitive. So being more competitive may not mean you have an advantage to sell it for the price that you want. So I'm like, I'm happy to hold it for a few months and, even carry the mortgage for a few months, but it doesn't make sense to carry it for a few months and still not be able to sell it in the spring. So now I'm a creative problem solver, solution, creator. That's who I am. So right now I've decided, okay, I have two daughters that are old enough that, I said to them, look, this is what I did for you. I created this portfolio, these properties. And so let's figure out a solution to hold on to this property maybe longer than the spring, and something that will work for us and work for the property in terms of getting it to you, generate the income that it needs to sustain it. So that's what we're doing now. So the market in Toronto and in the greater Toronto area has not been favorable to owners or investors. It is great though for someone who hasn't bought and who's trying to get in, because the prices are down. So don't hold off. Talk to Stacy, talk to Diana, reach out to a mortgage agent. If you don't have one, reach out to me and I'll get you connected with one so that you can start to shop. And you don't shop for a home until you've got a pre-approval. So you need to get the experts to help you figure out what is it that you can afford based on your current income, credit, and debt load that you're carrying. Okay. And so if you are willing to, and it's not a commitment that you have to buy, it is not a promise that you have to do anything, and you don't have to pay anything. It's just the first little step that you need to make to figure out whether you can qualify to buy something in the GTA. Maybe it's not the GTA, and that's okay too. You need to consider sometimes moving out of the greater Toronto area. Do you work from home? Because if you do, you can live anywhere. Or can you work from home for most of the week or a good portion of the week? Because then commuting may not be such a big challenge, right? You might have to commute once or twice a week. And that's not something unfamiliar to many people that want to own a home or want to live where it's affordable. So just keep that in mind. I think some of the some of the real important things that you have to consider when you're buying is to get that pre-approval, get that mortgage expert or mortgage agent to help you assess what is it in your current financial picture, your credit, your income, your debts that you need to do to get yourself in order so that maybe it's not immediately that you're able to buy. Maybe you have a 3, 6 months or 12-month timeline, and then you're doing what I think makes sense, which is planning, and strategizing so that that purchase can occur. And only the experts can really help you get on target and get you on track to do what you need to. I see in my chat, I've got quite a few people who are soliciting. Don't come on here to solicit. Come on here to ask questions to help get the information that you need to be on track to purchase. Or if you have a purchase, to see what you can do to realign or construct your portfolio so that it is cash flowing. And I mean, even if you're locked in a term right now, one of the suggestions that I would make that I've done in the past before, if you're in a fixed term and it's still 2, 3 years out and the rates are coming down, talk to your lender, find out what options they have to allow you to exercise taking advantage of the current decreases, and maybe don't do it immediate, right? Because I do feel that there's still some further decreases to come, but inquire right now to know what it would look like and what the dollar value would be, but maybe make the decision in the next 2 to 3, 6 months where we're going to still see some further decreases, because you can't consistently every 3 months or every few months, renewing or making changes. Lenders don't, they're not favorable to that. So definitely start exploring what you need to do to qualify and be able to start looking at your first home or your next purchase. It could be you own already and you want to buy something else. If you don't know how to buy something else with one that you own already, talk to us. Stacy knows how to help you with that. Diana and myself, we can help you. You don't have to just own one. You can own 5, you can own 10, you can own 100. You just have to do it the right way and get the experts to help you set it up so that it's workable. Okay, so yeah, I mean, if you have questions about this, please reach out and I'm happy to help you understand how you can get things started or what you can do to get things started. So, some of the key takeaways for you today: if you're a buyer and your current mortgage rates, you're not happy with your current mortgage rates, just let us know. We can help you re-examine those rates and see what you could be eligible for in terms of maybe right now or in the upcoming months, as I said. If you're an investor and you want to make some changes, keep in mind that with the shifting immigration policy that we see, it's going to have an effect on your rental demands. That's me. I'm a real estate investor. And so you want to become aware of that, because the increased rents that we've seen, they have been increasing because we have a huge demand right now and a lot of people looking for rentals, and we have a lot of immigrants. But when those numbers start to go down, our immigration starts to dwindle or is non-existent, then we're going to see the likelihood that we'll get our places tenanted is not going to be as great. We're going to see greater vacancy rates. We're going to maybe see the rents dropping. And so if you are in any precarious situation right now, this is the time to make sure that you start solidifying and getting tenancies on units that may be vacant. That's me. I've got a couple of those vacant units. And so for any of you out there that have vacant units, get them rented soon, so that you can take advantage of the current market. The rental rates are still pretty strong, but they're going to change in the upcoming year in spring when we start to see the effects of the immigration changes that we are hearing, right? Some of the things that you can do today, right today, even before you leave this live, is if you're thinking buying, refinancing, or selling, reach out to us. We can help you navigate that need, that change, and make sure that you're making the right decisions. Because maybe you're thinking of selling, and if we examine that and look at it, maybe that's not the best time. I just realized pre-Thanksgiving, that's Canada Thanksgiving, it was good. Right a week or two later, latter part of October, it changed. The market changed so quickly. Within 30 days, it became a really challenging market for listing and selling. And it really still is a buyer's market. So if you don't have to sell, don't hold on. Um, Also, for anyone that is, oh, we also offer a free strategy or discovery call so that if you're looking to create, a plan for yourself and you're not sure how to get started, we offer a free session. And all you have to do is reach out to me, and either my assistant or someone on my team can get in touch with you and set up a time, and we can get you well on your way to either speaking with an expert that can help you along the way, or giving you some advice and tips that maybe can get you out of a situation that isn't ideal for you and your portfolio, or for the next steps that you're trying to make. So do use those. We have our free sessions. We have the opportunity to provide you advice for buying, selling, or refinancing. If you're strapped for money and you own a property, we can help you do that too. We can help you find ways to get access to capital. Now, if you're not following or subscribing to me on YouTube or Instagram, please do so. We love, being having you here with us, providing you with the knowledge, giving you the information that you need. And do remember, we have another free session next week with 3 experts on that call next Thursday, November 14th at 7 p.m. that you can get information about how to make your money work for you while you sleep, while you work, while you vacation. And it's really teaching you how to be the bank and put your money to work for you. It doesn't matter how small it is. We have one of our product providers next week that can work with you with as low as 5,000. He could even help you with registered funds such as your RRSPs, RESPs, LIRAs, and your TFSAs, to put that money to work, because you might just have it sitting at a bank where it's earning nothing, because the banks don't pay you much. They love to charge you lots of high interest rates on mortgages, credit cards, lines of credit, and so on, but they don't give it back in return when you are lending your money to them to invest. And so we teach you how to invest so that you can get those double-digit returns that can get you on track to be financially independent. Thank you, everyone, for joining me today. And thank you for your continued support. Let me know how I can help you along your journey to build wealth, to buy your first property, to buy your next property. Thanks, everyone. Happy Friday. Enjoy the weekend, and we'll see you Monday.